Morning.
Morning, Preston. Morning, Luke. First time we've met in person. Insane, really.
I know, yeah.
When did we first interview Luke?
Oh, it's a long time.
Years
It was
ago.
like
2021
3 years
maybe?
ago.
2020,
Yeah,
Yeah.
2021 maybe?
Yeah.
I think it was like April 21.
But you're at the conference now. That must mean you've joined the cult of psychos.
Yeah.
You're in.
He is.
You're
He's
in.
here.
One
We
of
got
us.
him finally.
Is this your first Bitcoin conference?
This is my first Bitcoin conference.
Frick, you're one of us now. Luke is a Bitcoin psycho. It's going to be a busy week.
It's going to be a crazy week. It's already been a crazy week.
What do you think the highlight might be? I've heard they've got a couple of big speakers.
Yeah. Big speakers coming. I'm sure do you want to even talk about the rumors or should we say, I mean, when's this airing?
This will go out. I think this will go out on Monday, so it'll be after the conference.
Okay. Well, it's fine then. Here, let's talk about it.
What do you think of Trump's speech? It's fucking wild.
I mean, so like, dude, why right now compared to previous, because we had nothing like that in previous conferences.
I mean, hold
I
on.
don't think.
Was it 2 years ago where it was a while where we had Mayweather turn up,
Yeah.
Like Jake Paul was there.
Tony Hawk.
Yeah.
Yeah.
I just think it's becoming the thing to go to.
Yeah.
It always coincides with price.
Politically, though, it's supercharged this year.
Yeah.
I mean, because Kennedy's here.
Yeah.
Kamala's turned it down.
I've heard his speech is going to be super Bitcoin maxi based.
Interesting.
Well, Kamala turned it down.
Mm-hmm.
But I think she turned it down because she knew she was going to get booed and harassed,
I mean,
which is a
probably.
shame, really.
Yeah, but you know what? This administration, and I'm not one to get political, has been super anti-Bitcoin. I mean, some of the policies and things and with the Gary Gensler, and everybody's well aware. So, like, do that for 4 years and then show up at a conference and like, oh yeah, hey, now I'm pro Bitcoin. It's like, really? Like,
Yeah.
you've shown us nothing other than the opposite. So,
Totally.
yeah.
But it's a shame it's going to be kind of very right-leaning as a conference. It would be nice to have a bit of balance. I think I always think that's
agree with
important.
that. I agree with that. Yeah.
But the fact that you do have Trump there, Kennedy, so two of the contenders, and Kamala was considering it. I was saying it last night. Name one other event in the world where every single, an industry where every single person's either going to be there or was considering. You don't get this.
Well, I think you could make the argument. I mean, Kennedy wanted to run as a Democrat, but he wasn't. What's the word I'm looking for? Weekend at Bernie's enough, I guess, for them.
I was saying if they'd have run Kennedy and Tulsi together, that would be a problem for Trump.
Kennedy, yeah, I think that, but they're not going to.
Of course they're not.
Because he's out there talking about the deep state and stuff, and like they're gonna have no parts of that.
They'd already be talked about.
Yeah.
Well, anyway, we're here, big week. Luke, when we first spoke in 21, you're like, you had a mild interest in Bitcoin. You talked about you had a small allocation, and it seems to be growing and growing and growing. Like your interest is growing. Is it more conviction? Where are you with it?
I think it's two things. I think it's, you'd be remiss if the old saw about, price breeds conviction. There is an element of truth to that. And I think that's a function of one moment in time very clearly to me was fall of 2020, November 2020, when Bitcoin went back over $20,000, I think it was roughly. And I've been in markets finance for a long time. And so bubbles kind of always do one thing, which is they go up a bunch and then they crash and then they never come back. And so when I'd always held the Bitcoin allocation, I bought my first Bitcoin in 2013, held it, I'd call it a stub for quite some time, enough to kind of be paying attention and of interest, but not enough where it's like I'm watching every day and like, oh, it's up, it's down, whatever. 2017, okay, this seems like bubble behavior. Great. It's back down. Okay, great. 2020, 2019 starts bubbling back up. 2020 breaks back out above prior bubble highs. And to me, that was a real critical, I would say, tipping point in terms of when I say price breeds conviction. It's not just, it's up a bunch, so I like it. It's my priors were, okay, this is interesting. Okay, this acted like all the other bubbles I had seen in my career, in 2016, 17, when it went absolutely vertical and then crashed. Okay, great. I saw this with NASDAQ. I saw this housing. I saw this gold. Great. And then it did something different, which was it broke prior high within 3 years. I'd never seen that before. And that forced me to say, okay, well, I haven't seen this before. So what's different is clearly there's something different here. And then I think the other big part of it was credit to yourselves, the Bitcoin community.
We harassed you.
I was going to say you're very persistent, but you were, and thank goodness you were. It's definitely been to my benefit personally, and I think it's been more importantly to my clients' benefit, which is the speeches were essentially, or the admonitions were essentially, Luke, you have carried the football to the 1 yard line. Like, you've done all the work on the fiscal situation. You've done all the work on the debt. You know how it's going to go. You've got the ball on the one. All you got to do is say hike and step across the goal line. In terms of being a Bitcoiner.
Solution to all of it. Yeah,
Right, exactly.
Yeah.
So I think it was really those two things where it's, the price, and not just, hey, price is up, but if the negative case is this is a bubble, bubbles don't do that. I've been doing this 25 years. I've never seen a bubble do that before. I have to re-examine what my priors were regarding that. And the more you looked into it, and then in the context of, I know what's happening with the fiscal situation pretty well, I think. I've spent a lot of time on it, the debt situation in the U.S., in the West. I know what a train wreck that is. And so when you put those two together, to me, the message was, it's not a bubble. It's the last functioning smoke detector.
So it's like fiscal relief.
Yeah, it's a relief valve.
Yeah.
The release valve.
Yeah. Interesting. And so when it broke again this year and we broke all-time highs again, you're like, oh, I'm sure.
Yeah, and I'd been, I think, there really after the 2020, 2021 episode.
He has been, because you and I have talked quite a bit.
We've talked quite a bit. Yeah. So I sold some in summer 2021. Told clients I'm reducing a bunch. Some was moving to some hard assets. That was, at the time it looked better lucky than it was more lucky than good. I didn't feel any differently about it. It was simply, to be blunt, I paid off my house. It was like, okay, well,
Happy
this
days.
feels frothy, and you know what I can get. As someone who started a business from scratch, literally in 2014, put everything I'd earned in my life onto the table to start FFTT. I looked at a chance to go debt free, and you go, okay, I'm going to take that, and and then I'll just keep buy the Bitcoin back, which is what I did. I bought it back too soon. I was buying fall of 2021, and whatever, got up to 60, 67 for a cup of coffee, 61, whatever it got to for a cup of coffee in late 21. Bought through 22, et cetera. But I was writing about at the time, post 2021, I was like, this chart pattern of this spike, big drop, spike, starts to look like,
especially in log terms.
In log terms,
There's
it
nothing
looks
ever-
like
yeah.
dollars in Zimbabwe dollars. It looks like gold in Argentine pesos. It looks like hard currency in highly inflating emerging market currencies. That's what the chart looks like. And that to me was ultimately the message of, okay, bubbles don't break prior highs 3 years later. A bubble like that, if that's what it was, right? Because it was, oh my God. But it wasn't a bubble. They don't break a record price 3 years later. That is a currency issue. That's a currency debt issue come to the reserve currency of the world.
And are you noticing now with your clients, do they just respond to you or are they coming to you on the Bitcoin thing?
Oh, I think in terms of how they feel about it? I think the message resonates. I think there's still lots of skeptics. But I can tell you from an institutional and a mass market perspective, the skepticism around the U.S. has a fiscal and debt problem crisis accelerating now, and we're years into it. that is much more accepted. And then once you kind of accept that, because the math is the math, the symptoms are the symptoms,
Yeah.
then it gets to a question of, okay, what instrument, how do I position for that? And there's still, I think a hardy debate between, gold, Bitcoin in those markets. But I will say
Did Larry Fink change that?
I think
Honestly?
on some level, on some level.
New Treasury Secretary.
Are they just doing that for the headline? Sorry to interrupt.
No.
Keep going. You're on a rip.
so I think there's once you feel comfortable that there's a fiscal issue, that it is acute, that it is accelerating, and that it's sort of already over a tipping point, then it's okay. What instrument do I want to use to protect myself? The depreciation that is likely to happen, because it's how all these things have worked out. It's just a question of timing. And I think the recognition of Bitcoin as is really growing to being a more highly volatile but potentially / likely superior way of it's in more alpha, right? It's gold with more alpha, I think, in a lot of minds.
Yeah.
And it does a lot of things that gold does better than gold. Clearly, I mean that's, and as the understanding of that grows, I think that grows as well. So,
I mean, I still buy records occasionally, but I mainly listen to Spotify. Yeah, look, it's fascinating. I mean, look, I don't know about you, Preston, but something feels very different right now.
Way different.
Yeah.
Yes.
One of the things is almost as well, like on a personal level, there was a period of time where I felt a bit embarrassed as a Bitcoiner. Like, people, what do you do? It's like, oh, I've got an economics podcast. Yeah. Sometimes we talk about Bitcoin. They think you're a fucking idiot. They think you do CrossFit.
Yes.
They think you're a vegan.
I have the same exact problem when people, so what do you do? I was like, I've got a YouTube channel, and it's like immediately like, oh, so you're a dunce.
But something feels very different now. And I do, because you raised Larry Fink. That's changed the game in part. But I also think it's, I'm not an experienced economist. I don't understand the economic environment to the level that you two understand. But I know we're all being fucked, and I think generally people know they're being fucked now. I mean, I know at home, I can see everyone being squeezed. I can see it with my own businesses being squeezed. I can see revenues dropping, costs going. Like, everybody knows.
Yeah.
And so it's becoming easier to explain it to people. I mean, you're probably finding that person.
No doubt. When Luke was talking, the frustration that I get with traditional, because Luke deals a lot with traditional investors out of Wall Street or wherever with his research. The frustration that I get is everybody can get super descriptive into the weeds on the problem definition. Mm-hmm. Like, for eons. I mean, you see it in the media too, just like conversation after conversation after conversation, describing in nitty-gritty detail the problem. But then you look at them and you say, okay, I understand the problem. How does that resolve itself? Like, how do we get to the other side of wherever this is going? And it immediately just turns into a very dark conversation with really no solution other than it's going to get worse, and the trend is going to be way worse tomorrow than it is today. And I'm sorry, I just refuse to buy that that's where this is all going. I think that the pendulum swings and then it goes back the other way, and you're just you're oscillating between these poles. And I think if we were going to warp ourselves 30 years into the future, 40 years into the future, and we'd look back at this moment in time, we'd be like, there we were peeking out on the pole of it was bad, like things were falling apart. There's tent cities on the streets everywhere. But then it swings back somehow if you actually understand the incentives that are going to drive it there. And when I look at a guy like Luke and a couple others in the space that are coming out of these traditional, that can describe the problem all day long, but you know what else they can do? They can actually look at the incentives and a technological solution that solves these problems, and they're right there kind of laying it out for the world to see. And kudos to, I'm a huge fan of Luke. Kudos to Luke, because he's one of the few that can identify the problem and also construct a solution to the problem and define that for people as well as to how we get ourselves out of this stuff. So
it's quite a hard solution for people to get their head around to
It
begin with,
is.
though, because historically, if you look for a solution, it's like, okay, I'll buy gold or buy product. You just buy a hard
Yeah.
asset. And when you turn around and said, oh, that Bitcoin thing you've heard about that nobody knows who invented is a decentralized form of money, which is boiling the oceans and has made 21-year-olds as billionaires. Oh, that's the solution. It's like it's a hard leap to get through because people have been conditioned to thinking about Bitcoin in a certain way. I always just say to people, I've made all of my businesses Bitcoin businesses. And I've just said, this is my experience, is that the bar's a great example. It's made good money. I'm trying to spend the money as quickly as possible because there's no point leaving it in the bank. I'm doing a refurb now. Let's just get rid of the money. But then you look at something like the football team, we have savings and the savings are in Bitcoin.
Yeah.
And I don't want to spend that.
no.
And, that's given us a leveled up advantage because we've protected our income. And by protecting our income, we've been rewarded for being early with this Bitcoin. And I think people are starting to understand.
Yeah.
They're just starting to come across the line. But this currency problem is, you tweeted about it recently. Trump talking about a currency problem. How bad is it?
Well, it ties back, I think, to your guys' observation before about who's here, right? You got 2 of the 3 major political presidential candidates in the United States here,
And almost the third.
and almost the third.
yeah.
Money is political inherently, and it's a form of control. It's a form of power, and so it's interesting when you ask what is the message of these candidates showing up here now. It suggests we're in a very critical moment of time, politically, geopolitically.
Tell you an interesting Trump story from last night. And I won't dox
Yeah.
the other person because it's unfair on them. But we were at a party last night and we were chatting to somebody and their father is a very, very famous person. I'll tell you offline. You know what I'm going to say, don't you? Trump's orange pilled this person. So people are saying, oh, Trump's just here for our votes. No, Trump's orange. So this is somebody they've been trying to orange pill for years, right? Keeps yeah. We were chatting to him last night. They said, yeah, no, Dad's in now. I was like, what? It's like, yeah.
Trump called him up.
Yeah, Trump called up. We were like, what? Yeah, Trump called him up.
the heck.
Yeah, he's like, Trump called him up and he said, Bitcoin, it's the new oil. And they're in. So Trump isn't just here for votes.
Well, I think it, and maybe I'm putting too much emphasis on the BlackRock ETF in January. I think from the traditional, the legacy billionaires, the string pullers of society, of the legacy system, I think when they saw this guy who's managing the largest tranche of bonds on the planet, like come out fully endorsing this and getting behind it, especially considering like the whole ESG background that they were and like Bitcoin's tethered to energy, which is why all of us think it actually has value. This guy comes out, he changes his tune, and it's like all the drones on Wall Street immediately like flipped and like, okay, now it's fine. And,
and
Daddy has endorsed it, and so now we can endorse it, kind of thing. And I don't know. I think it was a major shift in groupthink that.
well, if he's going to be Treasury Secretary, they're going to have talked. I mean, it's either him or Jamie, right?
I don't think it's either. From my vantage point, I think that's just marketing. I mean, you know how the media drones run with things. I mean, it's just like, oh, you say this guy's name, and then how many impressions did you get for the Trump campaign for free because you said this guy's name? And it's like, oh no, we weren't even serious about that. So
see, I think we got to give a lot of kudos to David Bailey here.
Totally.
totally.
And it's very easy, especially if you've got Trump derangement syndrome, to be really upset by this, or if you're libertarian, to be very skeptical. I get all that.
Yeah.
But I think it's more than just Trump coming here to get the Bitcoiners' votes or just their money. Yes, of course that helps.
Yeah.
£60,000 for $60,000 for a photo helps the campaign. But I think David Bailey's worked very hard to actually orange pill these people. He did it with RFK. Was it last year or the previous year?
Last year, yeah.
And I think he's done the same. I think he's made them understand it. But look, let's go back. Sorry, let's define the currency problem first, and let's go into that because I think it's a nice thread to pull on. How bad is the currency problem now?
The currency problem.
Scale from 1 to 10, Luke.
Spinal Tap, turn it to 11.
Yeah, these things go to 11. I was just going to go there, right? It's very bad. It's critical, and it's from two angles. Paradoxically, it's from the inflationary angle and the deflationary angle. The inflationary angle is pretty straightforward, and then we can dig into it. The United States, which is the reserve currency issuer of the world, cannot mathematically sustain its debt unless its growth is above its interest rate. So little g above little r. So as long as nominal GDP growth is above interest rates, the U.S. debt is sustainable. Once upon a time, if G got below R, it was a problem. Now, because our debt to GDP is 122%, if G just gets too close to R, it's not above R enough, we will have a debt spiral. We started to see that last year in the third quarter when the long-term treasury market crashed 20% in a quarter, as measured by TLT ETF. If that's fine, that's called financial repression. G over R, great. The problem is that the U.S. debt load in nominal terms is $35 trillion. You need a sucker at the card table with a balance sheet that can hold $35 trillion of U.S. treasuries in aggregate while GDP grows 7, but your bonds only yield 4, 5. There is no sucker at the card table with a balance sheet that big. And so you need negative real interest rates. When there's no economically motivated sucker at the card table that big, you need central banks to do it. That is inflationary. That's the inflationary side of the problem. The deflationary side of the problem is this can be fixed by a productivity miracle, in theory. Our friend Jeff Booth has done tremendous work on this. The Price of Tomorrow. If you haven't read the book, you should absolutely buy it and read it like tomorrow. And it's a brief 120-page book. It lays this out crystal clear. But the point is that if you have a productivity miracle, then you could get out of this in theory. But the problem is the debt and deficit levels, the off-balance sheet liabilities of the reserve currency issuer are so high that if you have a productivity miracle arrive too fast, you're going to drive unemployment up. You drive unemployment up, you're going to drive deficits up, you're going to drive treasury issuance up, and you're going to break the treasury market that way. If the productivity miracle arrives too slowly, then we go back to point A about G not being enough above R, inflationary. And so there's really no fix. And I think I think part of the reason Washington is, let me restate that. I know part of the reason that part of Washington is getting interested in Bitcoin, why they're talking about currency problems, is they know there's no fix. They're painted in a corner. And then when you overlay on top all of this dynamic of peak cheap oil that we've talked about many a time, which is we're not running out of oil, we're not running out of copper. However, we are out of the cheap ores of copper. We are out of, just to maintain our level of production of U.S. shale, for example. Currently, U.S. shale production on the EIA report, the decline rate of existing shale wells, I want to say is like 600,000 barrels per day per month. And so it's been a huge success story, has been U.S. shale. And the nature of the geology of U.S. shale is that once you get to be producing, what we're producing now, 8 million, 10 million barrels a day of shale? Who knows? Anyway, the decline rate is, call it maybe 5-6% at the moment. And to be clear, that's not a linear decline rate. The decline rate declines as you stop drilling, right? It's basically, shale is like an after party, and after you win the championship for your football league, you shake up the champagne, you pop the cork, and it goes whoosh. That's the first 3 months of shale production, and then it's nothing, and then there's a long tail to it. And you kind of dump the bottle. That's shale. And you produce, decline, long tail, and so the more you layer that on,
very fiat.
It's so when we layer that on relative to, look, our society still consumes a lot of energy. It needs to consume energy to grow GDP, to sustain the unsustainable debt. And 70% of that is still fossil fuels. Big chunks nat gas now. Nat gas is cheap, at least in America. There's some real promise there in terms of what we're doing, nat gas liquids, et cetera. Punchline, though, is the biggest 90% of global oil production growth over the last 10 years has been U.S. shale. And you need higher prices. You get shale much below 70, 65 bucks, 60 bucks, oil, or you get WTI oil much below 60 to 70 bucks. You're going to start shutting down shale. And it's going to take you 3, 4, 5 years to get back to prior peak. I know that. That's a fact because it took us 5 years from 2019 to 4 years, 2019 to 2023 to retake 2019 production highs in the United States. So because it takes you a long time to sort of fight back that burn down. So you've got an inflationary side, you got to keep G above R. You've got a deflationary side where, you're basically trying to land a 747 on a piano wire of, to borrow a phrase from my friend James Lavish, is if the productivity gets here too quick, AI. People say, well, Luke, AI could be. Yeah, in theory. But if AI immediately causes white-collar employment around the world to go up from 4.1 to 6 or 7, like the China shock did in the manufacturing part of this country, you're done. Your deficit's going to go up, not down. It's going to more than offset the productivity increase.
My comment on the shale piece is so much of it was dependent on the cost of capital being next to nothing, like everybody got accustomed to. And when you look at how a lot of that was constructed, and they're looking at how the sustainment of all that CapEx moving forward, they're using inflation targets of 2% or less based leading up to 2020. And the industry is very slow, to bring things back online. It's very capital intensive. And now all of a sudden you're starting to see inflation, and it's like, oh my God, all these numbers and everything that we prepared for and the cost that we thought this was going to be is very difficult to sustain at the levels that the assumptions that they made leading up to COVID effectively. You made the comment about, people in DC are figuring this out. I would tell you proof of that is all the interest in stable coins. So Paul Ryan, former Speaker of the House, comes out and has these comments, what was this, like 3-4 months ago, about how important it is that we now can find a buyer for U.S. Treasury issuance, especially with where we all expect the issuance to go, which is off the charts. Who's going to buy it all? Luke discussed ad nauseum all the foreign, 22 trillion net.
The net international investment,
yeah,
net international investment position in the United States is,
and it's like they can't soak up more of this for where it's going, and it's not linear. This is exponential, where the amount of issuance is going to have to go. And so who's going to buy it? Well, we've talked about this many times on these shows, is stable coins are going to be soaking it up. But prior to recording, Danny and I were sitting here and we're talking about how you have a really interesting technological advancement happening on the Fediment side, where and the Lightning side, where Peter, you and I can set up a channel, and now with discrete log contracts, it's all Bitcoin. Let's say you need exposure to Zimbabwe dollars on your side because you live there locally, you have debt or whatever, that you need that type of stability in the local currency, stability, right?
Yeah.
So you want that on your side of the channel. I obviously want the Bitcoin on my side of the channel because I think it's going to outperform that local currency. And so we set up a discrete log contract, which is effectively a derivative of that channel that's just checking the price of the Zimbabwe dollar every 10 minutes. And then the sats are streaming back and forth between our channel. And all of a sudden you have Zimbabwe dollars, and that you don't actually have to back that with anything. It's just streaming the difference all in Bitcoin. And so what does that do if we play this forward? Because I think this is going to take time, 4 years, 8 years before this becomes much more common. But if you have all these local currencies set up in these synthetic stablecoin derivatives in these channels, how does that play out with the Tethers of the world and all these other stablecoin issuers that are buying treasuries to back the issuance of the coins? Because now you have some competition for buyers, which is the issue that the U.S. and Europe and Japan all have for soaking up all this debt that they're hell bent on issuing. So
that would fall back to the production, right? It's not based on what the currency is, the financialized. It's based on your fundamental production, right? That's a version of what China's doing right now in setting up in terms of, listen, in the BRICS, well, trade in local currency, settle in goods, net settle in physical gold, and setting up Project Enbridge and CBDCs to cut the underlying layer, the underlying dollar layer out entirely. And then it's
Well,
It's
it's
really
ironic, but it's ironic because for so long we spent time with this kind of existential threat of them shutting down Bitcoin. Certainly in the early days, it felt fragile. It would have been easy pre-2013 for the government to just close down Bitcoin, and they didn't. And then we've gone through a more recent period where Elizabeth Warren and her friends in Congress have attacked Bitcoin, and they've tried to demonize it. They've tried to bring in draconian legislation against it. But we're now in this position where it's like they may realize that actually they need Bitcoin and they need stable coins to maintain
Absolutely.
the game. I mean, you read the Mark Goodwin and Whitney Webb piece.
Yeah. Yeah.
I mean, they talked about this Bitcoin dollar system. It's just it's hilarious. And they're almost going to have to usher it in Bitcoin. They're going to give Bitcoin the red carpet,
No doubt.
to maintain the dollar hegemony. I always get that.
But that is really US centric, that viewpoint, isn't it? Because while that's very beneficial to the US Treasury, what does it do to all the emerging markets that are essentially dollarizing from the bottom up?
I think they need dollars. So when you're looking at how they're viewing, let's say you go to Zimbabwe.
People need dollars, though.
Yeah,
but what does it do to the government, to the people trying to run the treasuries in those countries?
It makes it a whole lot harder.
They're fucked.
Yeah.
Well, they're just going to have to either dollarize even more and just adopt that as their logo. I mean, you go to El Salvador, they use dollars, right? So I think you're going to find a lot of emerging market type countries they have to get out of their own local currency game. They have to either adopt the dollar, they have to do a Bitcoin standard, or
is this
something.
like the dollar milkshake theory playing out?
Well, I mean, when I look at that dollar milkshake, I would say Bitcoin is the thing that's above the dollar. Like, people were thinking that the dollar is getting strong. I don't see them having to issue all these treasuries to keep the thing afloat as being strength in the face of Bitcoin being the apex predator of the dollar. Mm-hmm. So
the mechanics would work for Bitcoin, right? Because now in theory, if you are running a surplus against the Americans, as all these emerging markets are, and your currency is weakening, are you going to go to the dollar? Or are you going to go to Bitcoin?
Well,
You're going to go to Bitcoin.
If you're profitable and you actually make money, you're going to Bitcoin.
Yeah, at least it's not all. Some of it's going to go to dollars, no question, for liquidity purposes.
Yeah.
Yep.
But who's running a surplus against the Americans? And the answer is everybody. Everybody runs. So in that scenario setup, you're, whatever, little country, yes, your currency falls against the dollar. Great. Get out of my currency, get into dollars. Okay, get into dollars for use. Okay, but wait. I am now still losing relative to commodities, because we're talking about here is the U.S. moving, to be clear, stable coins aren't going to get funded at 30-year paper. They're not going to be backed by 30-year paper or 10-year paper or 5-year paper. They're going to get funded.
3-month paper.
3-month, they're going to be in bills.
Right.
Yeah.
Bills are, so when you think about, if we took a dollar bill out here, it says Federal Reserve note on it, right? A dollar bill is just a 0% yielding bond of zero duration. It's not, that's it. That's all it is. It's a 0% yielding bond of zero duration. A T-bill is just a 5% yielding bond of 3-month duration. 30-year bond is a 30-year bond of whatever, 4%
Less
duration.
than that yield.
Right. Yes, right. Less than that yield. But the point is that the moneyness goes up that scale. Cash is very money-like. T-bills are pretty money-like. 30-year T-bill bonds are not very money-like. They're assets, reserve assets. So the more they issue, right? So the more they move toward T-bills, in part,
The more
maybe
they're showing you.
the more they move to stable coins, the more they move to T-bills, the more it is the Treasury issuing dollar money-like instruments to finance themselves, as opposed to financing themselves further out, which is all else equal inflation. I mean, imagine if Brazil came out and said, we're going to do all these deficits in 3-month paper. boom.
Yeah.
It's just America we're doing all this in 3-month paper, we're gonna put it in T. So now you're gonna get an inflationary structural underpinning. And as that happens, the price of Bitcoin's gonna go, like they need, as Bitcoin goes up, you need the stablecoin demand goes up, the stablecoin demand, but you're into a vicious cycle of, and as that happens around the world, that dollar inflation will pick up, and the message to the rest of the world is yes, the dollar is rising a lot against my currency, but the dollar's falling against what I need to live. But what's rising against what I need to live is Bitcoin. So I'm going to keep what I need, working capital in dollars, and I'm going to put everything else in Bitcoin. And the supply of Bitcoin is way smaller than the supply of dollars. And the conclusion you get to is, I think the human mind is wired for linear. This isn't going to be linear. This is going to,
Amen to that, by the way.
I keep going back in mind to, like I said something to someone last night. I said, "Do you ever see what happened to the Israeli inflation in the 80s?"
You told us about it. Was it a 3-year triple-digit inflation?
Yeah, it just up 200%, 3 years, and back down. That, when you start talking about the using stable coins, and which means you need financing, $2 trillion plus deficits, assuming no recessions, by the way. Those deficits go 3-4 trillion if you have a recession, which I don't think is going to happen. I don't think we're going to have a recession. But
they can't from a tax receipt standpoint.
But if you're going to finance it all in the bill markets, because that's where your demand is, it feeds on itself.
And think about it. You won't have a buyer unless it's short duration. Like if you're running Tether and you're backing all of this, you're definitely not buying 30-year paper. Like you're gonna get absolutely your face ripped off if you're buying anything with duration. So like the demand profile from any type of stablecoin issuer is like, I want the 3-month.
It has to be.
That has to be. And
otherwise, you're Silicon Valley Bank.
Yeah.
Tether's Silicon Valley Bank.
There's this match made in heaven that, they didn't realize that they were in love. It's kind of like Elon and AOC. They didn't know that they were in love.
Yeah, but that's the thing. It's like any money, like as a Bitcoiner, any money you want to hold long term.
Yeah,
I wouldn't be buying long-term bonds. I'd buy Bitcoin.
No.
Anything I know I don't need for 4 or 5 years.
But that's easy for us to say now because like we're dialed in on like what's happened since COVID. But from 1980 up until COVID in 2020, that's all you wanted to own was the longest duration bond you could. If they had 100-year, you should have bought it with everything you got because you would have made tons of money with the yields being continued to be compressed for 40 years. That's the reason nobody had an issue with this entire setup globally, is because as we were buying their physical things and their services and paying them with the keystrokes that we entered onto all this issuance, they happily took it because if yields keep going down for 40 years, well, you make boatloads of money on those things.
Yeah, on a real basis, all in. And that gets back to my first point where G was, R was comfortably above G when you factored in the capital gains on the bonds. And now R cannot mathematically be even close to G, let alone above G, right?
So what does this mean for the bond market? Is it just slowly dying?
Absolutely. Slowly, we'd have to define slowly.
Okay,
yeah,
but it's dying.
Yeah,
it's being. I would say it's being anesthetized, where you just it's turned into blood sport. Like you can trade 10 years, but like great, like they can't afford more than a 4.8%, 4.9% on the 10-year in the U.S. Everything comes unhinged. They're not going to let everything come unhinged. I mean, if you're not gonna shut down the U.S. military and stop paying U.S. boomers their entitlements.
Well, that was the other thing because I was like question austerity. Okay, austerity. What stops the government going through a program of austerity? Then we sit here with Matthew Pies yesterday and they're thinking, well, the first place you look at for austerity is maybe with the military because what is it, $900 billion, a trillion a year?
It's 900 billion.
Yeah, 900 billion. That's
what's on the books, yeah.
That's what's on the books.
Yeah, and then there's the amount the Pentagon loses every couple of years. But like, but then he was explaining, well, the speed at which China is catching up to the US militarily and the things that China's developing. So geopolitically, they can't take that risk.
No, I mean, there's a little bit of the metaphor where you said if they were going to kill Bitcoin, the government needed to kill Bitcoin pre-2013. And it's a little bit of the same story with China. Like if they wanted to, I hear all the time, well, we've got we've got 12 carriers or 13 carrier battle groups, whatever we've got now, and we're going to shut down the Straits of Malacca. And then China will run out of oil and we'll starve them. Like, that was a viable game plan in like 2010. And even then, it would have been
even then.
catastrophic to the markets, right? But
And all the supply chains that,
exactly.
provide the parts and pieces for this entire machine.
Yeah.
So
And now it's not viable militarily in that part of the world. I mean, unless you're willing to lose, you'd know better than me, but several carriers, it would be messy. The markets, supply chain, it's too late. And I think that's part of the reason the rhetoric on China has changed. We can tell when it became too late, when the Washington's rhetoric on China changed. When we went from China's good, free trade is good, neoliberals good, learn to code, you flyover country, deplorables, to China's bad, that was the moment. You can see that it was probably 16, 17, 15, regardless of how one feels about him, Trump was really the one that flagged that and opened that up. And I think a lot of the skeptics to that view of the world were converted during COVID when, Washington politicians I need a mask. Sorry, call China.
Well, but this was the thing that Bannon said about Trump. He said immediately, the first time he met him, he understood the risk with China. And look, for all Trump's criticisms, he's been on the ball on a number of items. I think it's objectively. He recognized the issues with the energy markets in Europe and relying upon Russia. Yeah, you got to give him fair dues, even if he's a bit crazy for you. I mean, I like him.
Yeah. I mean, he understands. And critically, I think to tie it back to the Bitcoin side, and what you're hearing about him on the Bitcoin side is everything we just described is a currency issue.
Yeah.
It's all the fundamental issue is the US dollar. The Chinese, completely rational. If I was China, I would do exactly what China has done, which is play the game early on, take your factories. There's a quote from Edward Luce, wrote a book called Time to Start Thinking, America and the Age of Dissent. He wrote this in 2011, 2012. He interviewed all of these scions of industry and education in Washington. And one of them was saying, it was actually the labor commissioner for Oregon, was over in Taiwan. And he said they were literally laughing at America. My host, we went out for drinks, they're laughing at us. We can't understand the game you guys are playing. Just keep sending us all the factories and all the jobs and everything else will be fine. And so they played the game. And then around 2011, 2012, China's like, we're good with treasuries. Now all the dollars you're sending us, which, by the way, last year we ran a $280 or $290 billion deficit, trade deficit against China. So we sent China $300 billion last year. What are they doing with that?
Gold.
Ports, gold, oil fields, copper, farmland, hard assets. They have been putting on the Bitcoin trade without Bitcoin, basically, right? It's
scarcity.
Get me out of the dollar. It's Gresham's law. They've been doing spend the bad money, buy the good money. They've been putting it on for 10, 15 years. The Europeans with Russia, that's what I would do too. It was a better source of gas. The Russians rarely if ever cut off the gas in the middle of the Cold War. It was cheaper gas. It was pipeline. Anglo-American foreign policy for 100 years has been do whatever we have to do to make sure the Germans and the Russians, the German industry and engineering, never gets paired with Russian raw materials. It makes perfect rational sense what they did too, but it ultimately comes back to the currency, which is this is bad paper. We didn't care. I mean, the Russians were literally selling gas to Europe throughout the Cold War. We didn't care until it started being done in euros, until Russia started buying gold instead of treasuries. Then we cared.
Yeah, hence why Tether buying treasuries is a good thing. They filled a certain amount of the gap. What are they, the sixth biggest buyer now? Fifth biggest buyer?
I don't know if they're that high yet, but they're...
I thought
I think they got to 8 at one point. They were above
they're
Saudi,
big.
above Australia, above Canada.
But trajectory-wise, they're
skyrocketing. And it's all at the short end, right? I mean, even that. Okay, so Tether's a big buyer, all at the short end. I think a fourth or fifth biggest foreign creditor of the United States is the Grand Caymans, an island with 65,000 people. They own $400 billion worth of treasuries. So you really, who's really buying U.S. treasuries, right? It's moving more to the short end.
Do you see the yield on the long duration getting back above the short duration yield? Or do you see that this upside down yield curve like continues to persist moving forward?
I don't think it can persist forever, the inverted yield curve, because it's just for a financialized system, that's death. That's you're being bled out. So I think it will change.
But there's not going to be much of a market on the long end because they're going to stop issuing.
It's not a real market. It's thinner than a yield. I mean, we all know it's not very deep. We know they've been pulling it forward. I think what will happen is I think we've already what we're seeing are the early stages of a de facto form of yield curve control. And the Fed doesn't want to call it that. They will never say that, at least until they have to, in my opinion, because that's the Hotel California for the Fed. If the Fed ever says we're doing yield curve control, the $130 trillion bond market, much of which is in dollars, will be sold to them like in the next month. They will have to buy it all. And so I don't think they'll ever say that. What I think will happen is by virtue of shifting to the front end, and by virtue of the fact the U.S. government cannot afford a 10-year much above 4.8. Okay, 10 years probably not going much above 4.8, come hell or high water. So then if government can't afford more than 4.8 on the long end, and an inverted yield curve is death, ultimately, for the entire financialized system that is borrow short, lend long, right? It's the old Sherlock Holmes, right? If you eliminate the impossible, then whatever remains, however improbable, must be true. The U.S. government cannot afford over 4.8 on the 10-year. The economy cannot afford an inverted yield curve. They're going to have to cut rates. They're going to have to cut rates. And they're going to have to cut rates because of the fiscal situation, full stop.
Is
Get ready.
Is that why there's like rumors that they're going to change the inflation target at the Fed?
I think so.
So they can drop rates?
I think so.
And do you think that'll happen soon?
Coming year.
Yeah, I could see that. I think they're going to have to cut.
Year from now.
I don't know. I don't have a great. I mean, I'll put it this way: the situation is very acute right now in terms. So if we go back in time a year ago, I published a report for clients that 4 highly destabilizing things just happened. This was August 2nd, I think, of 2023. I said, they just, the quarterly refunding, Treasury just said we're going to borrow a bunch more money, more than expected, at the longer end of the curve. The Japanese just came out and said we're going to widen out the yield curve control band on the 10-year JGB. The U.S. got downgraded by S&P to AA. And the fourth was that oil prices had gone from like 70 to 80, 668 to 80 in like a month, like June to July.
Squeeze in every direction.
Yeah, squeeze in every direction, the dollar higher. It was going to break the bottom line. And that's exactly what happened. Okay, fast forward to today. We have, it hasn't been QRA. The Treasury Quarterly comes out Monday, Tuesday. That's going to be a really interesting moment in time. But Congressional Budget Office, CBO, came out and said in June, oops, the deficit's up 27% versus what we thought it was going to run in February. 4 months up 27%. We're going to need to place an extra $500 billion, $400 billion.
Wow.
Oops. By the end of the fiscal year, which is September.
Half
a lot
the
more
DOD
borrowing.
budget, yeah.
Check. Oil went from 70 to 82 in about a month. Check. Japan. We know we've all been watching the yen. It's been shitting the bed to be nice.
Yeah.
Which ultimately is a Fed problem because Japan can defend the yen by selling treasuries or the functional equivalent, putting upward pressure on Japanese yields and upward pressure on U.S. yields. Check. And this year's political instability in the United States, last year's had nothing on this year's.
No.
We've got an attempted assassination. We've got an admission of something we've all known. I'll put it, 51% of us have all known Biden has not been there for
years.
18 months to 2 years.
100% of us have known.
Okay.
51% have admitted it.
Admitted it.
Yeah, I like
Yes.
that, Peter.
But
yeah.
it gets into this point too, again, of this. This is a system that runs on credibility. And this is just the latest. You are unable to protect the Republican candidate in what is generously a very big incompetence, looks to be just galactic level of incompetence.
And that's putting it nicely.
That's putting it nicely. You have the Democratic frontrunner who they finally admit, oh, by the way, he's not there. He's weakened at Bernie's. And the Wall Street Journal last week said that the last time he met with the House caucus was in October 2021. Wall Street Journal said this. And they said he was incoherent in that meeting then. They've known for 2. So there's this string of things that has just been a lack of credibility, lack of faith in the way they've handled things over.
Currencies are all about trust.
Yeah.
Fiat currencies are all about trust. And hey, like, so, and this is, I'm not picking on, but like, I will go after both parties equally hard. I mean, this to me goes back to Clinton, Bush.
Yeah.
I could go chapter verse here on this stuff, but my point here is, because I can get going, is we are now in this moment of time when we talk about the interest rate cuts that might be needed. We are in a situation, the same one we were, arguably worse. We have this QRA announcement coming up Monday, Tuesday.
What is that?
This is where every quarter Treasury comes out. It's quarterly refunding announcement. Treasury comes out and says, here's what we're going to borrow on the first day, and here's how we're going to borrow it on the second. And so it's going to have to be more because we know CBO said it's going to be more. What we don't know is if it's all at the front end,
It will be.
Risk on.
Yeah.
And if it's at the back end, it's risk off. And the last year when we did this, Treasury market crashed 20%. We went into a debt spiral. It was basically dollar up, gold flat, everything else got crushed for 2 or 3 months. And then they changed, the Fed started jawboning rates down. The bond market's done our job for us. And then more importantly, Yellen shifted issuance to the front end, drew down our reverse repo. That functionally is just QE. Drawing down issuing more bills and drawing down reverse repo is functionally QE. It has the same effects. You reduce issuance of duration, you increase bank reserves, you loosen financial conditions.
So based on what you just said, and the election brewing here in November, it
probably
seems
do
like they're
it
going to, it's all going to be.
I think my point is they're going to have to do shade to the front end at least, and they're going to maybe have their hand. And if they don't, the markets are going to force their hand. If they try to play it straight, you're going to see a shit show in markets over the next month or two, and then they will go. Then you may see them. Then they'll have to cut. They'll do whatever and then it's going to look. It's going to look political, blah, blah, blah. We'll deal with that when we get there. But that's a long-winded way of saying it. But that's the context in which I'm thinking about, okay, ahead of the election, are they going to cut rates? Like, I think the markets might force their hand.
Good, because I've got a bet with Mike Green. I've got a bet with him that Bitcoin hits 100K this year.
Oh, that's right.
Yeah.
Yes.
And that's a 100K bet.
Ooh. You're going to win.
Yeah, I hope so. I hope so. Yeah, fucking fire that shit up. Okay. So realistically, we do have this Trump administration that may come in that seems to be pro Bitcoin. What are the things they could do with Bitcoin to strengthen the dollar, to kind of reverse this trajectory towards massive inflation? Is there anything they can do? Is there a serious?
Sure. If they came to me and said, Luke, we want to make you an undersecretary of the Treasury. We want you to fix this fiscal situation based on what you know, and we want you to use Bitcoin.
First, you laugh really hard. Then,
no, I actually I'm like, okay, I need you to write something that I can do it via the Exchange Stabilization Fund, whatever. You write I'm assuming you're going to front run and clear the legal stuff because gold shows up all over. Bitcoin doesn't show up anywhere in sort of some of the documentation of things you can do. So assuming that's taken care of, I think one thing you could do immediately would be something, a modification of something Judy Shelton, who was within a couple votes of getting on the Fed board under Trump the first time, has proposed with gold, which is you throw some Bitcoin out on the curve, so to speak. Which is to say, we're going to issue 10-year, or we're going to term out, I don't know, $5 trillion of debt, long term, 30 years, at 1.5%, 2%, say 2%, because then that gives you room to cut the front end down because we do have to keep the curve positively. So, say 2.5. We're going to cut 30-year Treasury yields. We're going to issue 5-year Treasury, $5 trillion of 30-year Treasuries at 2.5%. And each one of them is going to have a Bitcoin kicker. you will have, I don't know what the right number of sats is, whatever.
Percentage wise, what, 2% of
I
the
don't know,
overall par value, something
like that. Yeah, you go by percentage of par struck at the day you issue them, something like that.
Yeah.
There's no credit risk to these securities. There's never, ever going to be credit risk to these securities. The only risk to holding a long-term treasury, a long-term sovereign bond in any country, really, is the value of the currency. And I do that, I've taken away all the inflation risk. Go.
Let's look at it through this lens. If you were sitting at Tether and the U.S. Treasury came to you and said, what would it take for you to start buying 30-year duration treasuries? If I'm sitting there right now and you said that you would back it with 10% Bitcoin, I would maybe be interested in buying that to protect now I'm assuming a lot more risk, but I think that would probably outperform. If you say it's 2%, I'm saying that's about what I think it will perform at based on the current price and where we're at today. Like right now, if you're watching this 3 years from now, these numbers are going to be very different than they are right now that I'm saying. But I think that would probably be the break even. I wouldn't do that deal because it's just, there's not enough margin of safety on it.
Yeah.
Under 2%, I think that's a raw deal. But so let's play it forward. Let's say Bitcoin's at 500,000. I think at that point, if I'm sitting at Tether and they're telling me to buy a 30-year bond from the US, I think at that point, I would need 20 to 30% backing at a $500,000 Bitcoin price relative to the par value of the. And I'm curious if some of these numbers that I'm throwing out seem to make sense to you.
Directionally.
Right?
Directionally. Go ahead. Yeah.
Because when the price is at 500,000, like you're that much further along in this adoption curve. Mm-hmm. And so you have to, because I think the break even, quick. I think the break even at a $500,000 Bitcoin price is they need at least 10% backing for any type of new long duration issuance.
Well, and there's a game theory to that too.
At a basic level. Yeah.
There's a game because, and it's almost the same game theory as, well, they could have killed Bitcoin in 2013 if they were going to, or they could have stopped China in 2007 or 2008 if they were going to. Mm-hmm. The longer you wait with this and the higher Bitcoin goes and the more the fiscal situation gets worse, like this is just a credit workout scenario. This is just a bank workout for the reserve currency issue of the world. That's all this is. And the other Western sovereigns too, by the way. But for the reserve, so like your deal isn't going to get better as your debt goes up and as your inflation metrics go up and as the situation deteriorates further. Today's the best deal you're going to get, barring a productivity miracle, which again has to arrive at just the right pace or else it makes the whole issue worse faster.
This is why, from an operational business standpoint, this is why it's bad that they're being forced into just issuing short duration money, and that, like Luke and I were saying earlier, the long end of the curve is going to be a fake fiction market until you have some type of peg or valuable thing that's associated with it. So here's why it's important. If I'm a business that has, I'm in manufacturing or something like that, I want to do long duration contracts. It gives me stability to basically plan things out. I want to do a 5-year deal or whatever. It could be cost plus, it could be firm fixed price, whatever. But I want to do a 5-year contract or a 10-year contract if possible. Okay. Big business that's moving billions of dollars. These are the kind of contracts that they enter into with their vendors. If you have a fake market for the cost of capital for 5, 10, 15, 20 years out, and you don't actually know what that is, the market's going to assign the risk premium to that. And it's going to be nowhere near what the government wants you to think that those percentages are. So how can I enter into a 5-year contract with somebody if the only like real rate that I can reliably trust is 3-month money? It's very difficult. And so what's happening is you're having a breakdown and an erosion of business at large because nobody can enter into like real long-term contracts, which is how most of the underpinnings of society is based.
It's such a great point. It triggered a thought in my mind, which is I have sort of fingers in a number of different pies, so to speak. And so I spend a lot of time in the financialized world. And if you sit down with like a rates trader and Preston says that, he'll say, so what? Price of the money, price of money, Fed's going to do what they're going to do. You know, the markets say all. I'm also a private equity investor in an electrical infrastructure company. And it's boring, It's wonderfully boring. It's a great business. They make just like the metal components that go into transformers and the electrical grid at large. They're generation agnostic, so they don't care if it's coal, gas, wind, nuke, whatever. Electricity. They're moving electricity. As you can imagine, their business is unreal.
Yeah.
They can't hire enough people. If they hear what Preston has to say, that this is critically important because we are in theory in the middle of a great electrification. We are in a great power competition. We need way more power. We need way more power for AI, for the cars, for all this stuff. And the problem is for so many years, Wall Street has controlled the policy discussion. Washington, the Wall Street guys are going, oh, who cares? The price of money is price of money. We control the price of money and markets will win out. But like the real economy that really, for most of us, that we turn on the lights, when the lights come on, it's this real market that needs to have some semblance of the real cost of capital for 10 and 20 and 30-year projects. And that's, by the way, what we need to do. That cost of capital needs to be solid,
stable,
understood, well understood for us to do strategically what we are trying to do. And it's not being allowed. And I think when you kind of frame it that way, it's fascinating because that's part of like the Bitcoin discussion, which is I think we're living through a historical moment, probably not seen in this country since maybe the 1850s, of a fight between two. Everyone talks about the Thucydides trap between the U.S. and China, but there's a fight internally between the incumbent source of political power and the rising source of political power. And maybe the 1850s overstating it, but go back to the 1960s, where manufacturing and production and what's good for GM is good for America ran things. Over the last 50, 60 years, we've transitioned to this financialized, and so now the financial side they control the levers of power in Washington. But now we need to make stuff again. It is critically important to make stuff again. And so you're having this fundamental tension between, hey, we just want to trade rates short term, and that's what's important. And hey, the lights need to come on. And by the way, we need 5, 10 gigawatt friggin' data centers like last week, and we need 30 nuke power plants.
Reality and the financialization, thinking that you can just do clack on some keys and solve. We can get more GDP by clacking on these keys a little harder. It's totally detached from reality.
Yeah, it's the same thing happened in Ukraine, right? Yeah. It's like, well, our GDP's 10 times Russia's. We're going to kill the Russians.
Yeah,
how'd that go? Well, how are they outproducing us? Oh, well, the simple fact is that $1 of GDP in peacetime, $1 GDP is $1 GDP. In intense competition up to and including war, purchasing power parity is what matters. It's the only thing that matters. $1 of GDP from flipping a JPEG, a monkey JPEG back and forth, or a house back and forth is not the same as being able to produce 155 millimeter artillery shells. Full stop. Or drones. Full stop. That's like we're seeing the manifestation of this problem over and over and over. So when you said that to me, it's a cost of capital issue.
Yeah.
And so
it's a duration stability. It's the stability of cost of capital.
And a time preference understanding.
It'd be like if you pull up your Apple calendar and you can only plan tomorrow, right? That's all you can do. Like, how can you function and compete versus a person that can plan 5 years out and like strategically plot and plan their calendar to be productive? It's impossible. And this is how business operates. Like, they have to know how much something's going to cost for their expense structure, because it's all about producing a bottom line to stay solvent and stay in business. And if you can't plan that out, like, you're dead on arrival. And
if you ask the financialized guys, like, hey, would you borrow short and, would you do Silicon Valley if you knew inflation's coming? They'd be like, no, that's stupid. That's what happened, right? Well, so they understand the problem. It's the same problem. If you're building, if the government goes to you and say, hey, build a nuke power plant, and I know the cost of money today and I don't know inflation, you know what the answer is? No, it's America's grid.
I'll slap 100% risk premium on it. It's like, or whatever, right? Like they're gonna price it, but you might not like the price.
Right, and you saw there was this LNG terminal that went bankrupt a couple weeks ago. This construction company, because they couldn't keep up with the cost. Like they're like this massive contractor building LNG export terminals in the United States. They were upside down. They declared bankruptcy. You can Google and find. It's the same problem over and over of like, Luke, we need you to build a nuke power plant. Okay, well, What's the rate today? Okay, we know that. What's the inflation rate? Don't know. Okay. What's the cost in China? Well, it costs China $2 billion to build a nuke power plant for 1 gigawatt. What's it cost you? $12 billion. Okay. So I'm 87%. There's 87% cheaper than me. Yes. How do I compete? And by the way, electricity is hard to send overseas, blah, blah, blah. So but in lots of other manufactured goods.
And I'll do the O&S cost for the next 10 years on something like that.
Right? So
it'd be like 95% difference.
Yeah. So like you can't compete. So are you going to make the investment in the physical property, plant, and equipment without the concrete knowledge of sort of that long-term capital structure and no, you're not. You're just going to say, you know what? I'm not going to invest. I'm just going to raise price, baby. And that's the word. I'm just going to raise price. I'm just going to raise price. Why build why build another facility? Just raise price, raise price, raise price. And then your real economy becomes increasingly uncompetitive when it's really functionally at the core of it.
The best part of all this is
Cost
you
of
don't even
capital.
have to really understand any of this. You just got a dollar cost average Bitcoin and fall asleep and just like enjoy the ride.
Wild. Fucking hell. Okay, cool. Well, you got any more questions?
No, I'm just so bullish on Bitcoin.
I'm so bullish on Bitcoin. Let's go and buy some more Bitcoin. This is amazing. So good to finally get you on the show in person, Luke, and the two of you together was magic. So thank you.
Thank you, guys.
Conference
Thanks for having us
weekend.
on.
Let's enjoy. Thank you, everybody.